Welcome back to Metals, Money, and Markets. We're at August 17th. For MiningClips.com, Rob Goodman, and as always, Mickey Fulp, the Mercenary Geologist, will break this all down. Hey, Mickey, theme continues the same. The dollar took a little breather, but boy, I tell you, the metals didn't. All of them off across the board. Big down week.
Well, it was a big down week, but it was even worse on Wednesday when the dollar soared to 96.7. It backed off considerably over, really today, which allowed the metals to recover somewhat. Gold still closed down over 2%, 1185. At one point it was 1162, which is the low since late January of 2017. Silver closed at 1477, down 3.3%. Platinum just got brutalized. It closed at a 14-year low on Wednesday. It rallied a bit today, closed at 788 for a 4.5% loss. Like I said, we haven't seen these numbers for well over 14 years. Palladium bucked the trend. It actually was up $2, closed at 906. Really what happened, the dollar gave back some gains, especially late in the day in the metals rally.
And copper, just an absolute horrendous, biggest down week in I don't know how long, ever. About 7 weeks since it had something like this, but big down week.
Yeah, it was down almost 5%, closed at 265. This is its low since early July of 2017, so 13-month low. Driven by massive shorting of the market. And we've seen this throughout commodity space. Markets are net short in just about every commodity. 7-month backwardation, so that does not bode well either. Basically because of trade tariffs, weaker Chinese economy, even though they did have record July imports of copper cons and ores into China. Chinese economy is just showing some weakness right now, and it's not being helped by all this trade tariff talk. And finally, all the Chilean labor issues that we thought were going to hit the market this week, a couple of those were settled, so that didn't help prices either. Copper's down 19% since mid-June, so in 2 months, that qualifies as a bear market. But it's not the worst. Zinc's off 30% this year to date. And this is despite the Baltic Dry Index, which is usually thought of as a leading economic indicator, is near its 12-month high. So it's really speculation driving this. One thing I want to mention is the platinum to gold ratio closed this week at 0.66. That's an all-time low.
And heading over to the energy markets here, where another trend here, 7 in a row for oil, off almost 3%.
Yeah, what is it? 7 weeks in a row, oil's been off, driven largely by a big U.S. inventory build out when a drawdown was expected. Rigs are flat, closed at 65.85, down almost 3%. So we've gone from 74.30s 8 weeks ago to 65.85 now. Couple of things going on. The Keystone XL pipeline was delayed once again by a judge in Montana ruling about things that happen in Nebraska. I don't know how that works. Libya, Venezuela, Iran, sanctions on Iran, and Libya and Venezuela have problems with supply ongoing in Libya, Venezuela, Iran. That's no surprise. And the other thing I want to talk a bit about, Canadian oil, Western Canada Select, their benchmark heavy crude oil, is now trading at a $31 discount to WTI. And certainly this Keystone Pipeline delay is not going to help that. And the Trans Mountain Pipeline, the one since dispute in Alberta and BC, the capex on that just came in at $1.9 billion more than initially projected. So Canadian oil patch in a world of hurt.
Uranium up 20 cents this week.
Yeah, it's uptick for 2 months in a row, closed at 26.25. As we said last week, still a long ways to go.
Heading over the currency markets, relatively flat. I guess the loonie led the way.
Yeah, the dollar actually finished flat for the week, closed at 96.12, off 0.2%. But really, the story was it surged in midweek. It was 96.73, I think, 24 hours ago. So it gave back quite a lot. And the loonie responded to that. It closed at 0.7656, up 0.6%. Euro basically was flat at 114.
Wrapping up the equities markets here. New highs for the Nasdaq, pulled back a little bit, but yesterday, a lot of volatility, I guess, for this markets.
Well, I didn't look at the VIX, but I would imagine, and that's an S&P 500 metric, that volatility, the VIX was not very high this week because it is the summer doldrums. The Dow had a very good week, 25,669, up almost 1.5%. That is very close to the yearly high, maybe 150 points off of the yearly high. S&P 500 closed at 2850, up 0.6%. Nasdaq had a very negative week with tech issues. Big tech came in, got hammered in a couple of instances, and also Elon Musk had a meltdown, and Tesla was off 9% today. That really affected the Nasdaq, which closed at 78.16, off 0.3%.
And wrapping up the venture, they might need to find religion up north. That thing's in trouble.
We knew it was going to be in trouble until at least Labor Day. The question is, can it rebound? It closed at 677 for almost a 2.5% loss. That's its low once again since April of 2016. Volumes are up a bit this week. We'll see where it goes. Got 3 more weeks to go before we're past Labor Day, and certainly do not expect a rally before that.
Tremendous buying opportunities if you are paying attention. So, Mickey, appreciate the insight as always. Enjoy your weekend, and we'll catch you next week.
All right, thanks a lot, Rob.